Ladies and gentlemen, good afternoon, and a warm welcome to Baltic Technology Ventures Investor Webinar, The Future of Baltic Venture Capital. Today we are hosted by the CEO of Baltic Technology Ventures, Gene Zolotarev. We will start the webinar with company's presentation, which will be followed by questions and answers session. We are excited to hear more information on planned SPO and current events in the company and field. All attendees are very welcome to participate by typing your question in the questions box, which can be found in the settings panel zone on the right side. Gene, I invite you to start the presentation.
Thank you, Marta. Good morning, everyone. Even though I was very pleased to see that we have participants literally from all over the world. Some are have even getting up in the middle of the night. Those of you who are in the States to listen into our webinar. And thanks again to Nasdaq for arranging this event. So obviously your support and your help are very, very useful to us. So before we jump into the presentation, which is not long, I'd just like to make a few points, briefly talk about why we're doing what we're doing and what is Baltic Venture Capital environment and ecosystem, and explain why we think it's the best investment to be, the best asset class to be, and also why BTV offers the best value proposition for anyone who wants to invest in startups or VC space in the Baltics, or pretty much anywhere. So to start off, in case you haven't noticed, venture capital VC has been one very hot asset class during the last year, and it's going from strength to strength. The pandemic possibly was a catalyst for this, but frankly, even before this, we've seen a lot of the early signs for this asset class becoming increasingly widespread, increasingly popular, and more and more, say, mainstream financial institutions are becoming engaged. This year, we've seen such giants as JP Morgan, Goldman Sachs, Wells Fargo. They've all set up VC funds, VC incubators, VC investment vehicles for their investors. So we're now seeing VC going mainstream. But what does that mean for a regular investor? Because that's the question we ask ourselves. We've had over 15 years of investing in startups, but most of them have been pretty much piggybacking on friends and family deals. And so a lot of accumulated knowledge in the background. So if you want to invest in VC, if you want to invest in startups, you pretty much have two options. You either do it yourself or with a group of friends. That tends to be a lot of fun. However, it has an extremely high failure rate, and that is just a fact. People who just do it on their own, without deep prior experience in developing startups or venture capital firms, I mean the failure rate is very high and success rate is very low. The other option is to give your money to the professionals, invest in venture capital funds, and there are plenty of them all over the world, and there are quite a few of them in the Baltics. Then the challenges are as follows. They ask you for a fairly high minimum, so the barrier of entry is quite high. You also have to lock up your money for the average of about 10 years. And they also charge you fees while they're doing that. So the value proposition, to me, it doesn't sound very compelling because you have an uncertain timetable and an uncertain outcome. And so we were trying to address this when we're setting up Baltic Technology Ventures. And the answer we found was in doing it through a publicly exchange-traded vehicle, through a company that's listed on a reputable exchange like the Nasdaq Baltic First North. And it offers, in our view, an excellent value proposition to investors, because all you have to do to participate in the underlying portfolio of our companies is to buy our shares. And that's what we're going to talk about, because we're in the middle of doing an SPO, secondary public offering, It's the first one we're doing, so we'll talk about that during the presentation. And also, so having said that, put that on the side, is why the Baltics? So in our view, the Baltics is the best VC space anywhere in Europe, possibly the world. The best value for money, risk return ratios you could possibly find. So you have a deep well of talent, a lot of government support, and the runways are long because life here is relatively inexpensive compared to other places. So you have kind of the best of both worlds. You have highly developed infrastructure, a lot of talented, ambitious people, and actually more people who are not from the Baltics are being attracted to the Baltics to set up their startups and to grow them here. And at the same time, you get a lot for your money. So that's why we think Baltics is the best place to be, and why BTV, in our view, is the best value proposition to play VC in this space. So having said that as the introduction, let's jump into the presentation, and where I'm going to talk about why we're doing what we're doing and why we feel we're different and better, for the risk of sounding immodest. So, like I've said, VC is a thriving asset class. All over the news this year, VC is going from strength to strength, and it's really hitting mainstream now. Not there yet, and when it does, we're talking about hundreds of billions going into the space. So it went from a fairly exotic asset class reserved for either very wealthy or very knowledgeable people in technology space to an average person. But how does the average person play VC? How do they start investing, and how do they actually benefit from all this rise? And this is where BTV comes in. So next slide, please. So once again, why are we focusing on the Baltic states? We think it's a great place to be. So you have not only a wealth of talent and increasingly better infrastructure, already really good, but getting better every day. You have a lot of people with a lot of skin in the game, a lot of entrepreneurial spirit. So we've had, lots of, okay, obviously people have heard of major successes like Skype and Bolt and Bitful, Vinted, Pipedrive, TransferWise, Playtech. I mean, these are, practically household names, and they came out of, these like small countries with a lot of potential. So, but for every like unicorn, we see hundreds of companies out there with amazing ideas, amazing technology that could really benefit from our skill set to take them from where they are, which is pretty much ground zero, to where they could be. And where they could be is, sky's the limit. Next slide, please. So where do we come in? All right. So where we feel that we add the most value is what we call post-revenue pre-Series A. So we like to focus only on those companies that already have achieved some kind of traction, have started already, getting some kind of revenues, even if it's very early days, but something. There's some kind of market validation for their product, but that they haven't really raised any meaningful funding. So that means their valuations are in low single digits, and we feel that if we get in early enough and we help the company scale using our skill set, which is mainly investment banking, and we're very well connected in the industry, getting them to be a regional success story, we feel that if we can do that, and we can move the needle from whatever roughly low single-digit valuations to low double-digit valuations within 2 to 3 years, this would be our exit point. So we would aim to get out at, say, Series B funding round, and aim to make anywhere from 5 to 10x on our capital. So very healthy return, and it's also a lot safer to bet on this part of the curve than either earlier or later. That's in our view, because I think it's a lot easier. I mean, nothing's easy, but it's still a lot easier to move the company from the valuation from 1 million to 10 million than to move it from 10 to 100 million. I mean, we're talking about a completely different ball game. But before that, once the company actually validates its product or service, it's too dangerous because too many of them go bankrupt. So in our view, the safest and most profitable part of the investment curve is post-revenue pre-Series A. And what we're trying to do is a couple of words about BTV. So the company's actually been listed since 2013. It was called differently. It was called Baltic Telecom, and we've renamed it into BTV about a year ago. And we've basically started to invest in venture capital, and we started to buy, take stakes in startups, and we aim to achieve very small, take very small positions and grow them as we deliver all kinds of value proposition to the startup. So the more we do for them, the more equity we're going to get in the company, and the more valuable our stake becomes. So for the time being, and this is actually why we're doing the SPO, is the shareholder, the founding shareholder, SEC Baltic Opportunities, which by the way is my company, owned 100% by me. It owns 98% of all outstanding shares of BTV, and that's not helpful or meaningful or not good for growth. So for the first time ever, we're opening up the shareholder base. We're doing the SPO, secondary public offering, and at the end of that, the free float would increase from 2% to about 12%. So obviously the stock will be more liquid, better traded, much more diversification of shareholders, and that's what we're trying to achieve. We're trying to grow a major company with high valuation, and we're offering this obviously at a very, in our view, a very low valuation, very attractive for investors to get in on the ground floor as we grow, as we expand, and as our portfolio grows. So that's the background for BTV and where we're going. So next slide, please. So I briefly mentioned what the investment strategy is, like where do we invest and what part of the curve. So as you have seen, we've done like a very basic graph with valuation and risk. So obviously, as valuation grows, as the company becomes more valuable and more established, the risk diminishes, and there is a sweet spot in our view in this graph, and that's where the company starts to make revenues, but before they start scaling and their valuation grows dramatically. So somewhere between that and that second stage is where we feel the sweet spot for us to come in and help the company grow in a very meaningful way. So we aim to have minority stakes. We don't want to run these companies. We just like to help them. So up to 10% of the startups is where we like to be before exit. Our entry point could be as low as 1 or 2%. Then we earn or buy, or using our options, more equity as we go along. So as we see the companies growing and is becoming more profitable, and its valuation is potentially growing, obviously we have an incentive to increase our stake, right? And that is always the view that we have. We treat each company not as a kind of an endless strategic investment, but as a very clear investment with 2 to 3 year investment cycle, where we come in at a certain valuation. We have a very clear idea of how we're going to improve the company, where we're going to help the company get more revenues, enter new markets, acquire strategic partners, and then we will exit when the company achieves a certain scale and let somebody else possibly develop it even further, possibly making it into a unicorn. But our view, if we stick to what we know, which is getting that company from low single-digit valuation to low double-digit valuation basis. So, if we go back to that slide, I forgot to mention. So what people will always ask us, so do we have a particular sector preference, or do we have any kind of an industry expertise? And the answer to that is we know what we're looking for. I mean, we're looking for scalable products or solutions. So as long as it's scalable, obviously they'll make it heavily heavily geared towards like software or things that are somehow technology and computer based rather than products. We're not crazy about manufacturing, so we occasionally could make an exception if there's a device, only if it's part of something else. If it's a device part of like an ecosystem, like one of the companies where we have is called SysOp. It's they do have a tracking device on motorcycles, but it's not just about the device. It's about building a community and a platform and an ecosystem, and it's basically kind of an Apple Watch for your motorbike. So that is, in that case, we make an exception for device. Normally, we don't like manufacturing because that can be easily replicated, difficult to protect, and very capital intensive. And we also tend to stay away from deep science. That's also kind of easy to steal, difficult to protect, and it could be years until revenues start coming in. So next slide, please. So I mentioned in the beginning of the presentation, I'm going to talk about why we are different and better. So once again, for portfolio companies and for investors, because we have to separate the two. So for portfolio companies, someone who wants to work with BTV, we don't charge them for mentoring. I mean, this is all kind of free advice. We also have a very strong IP advisory and legal team. We help them protect their intellectual property. We promote the company for free. We own our own media channels, Baltic Times and Baltic News Media. We do interviews with the founders. We have a special, even a section that's called the Entrepreneur of the Month. So we promote the companies we work with very heavily. We use our network to help the company get into new markets, establish more credibility, get new partners whatever markets they choose to be in, and we help them raise money. So we lead with a transaction. We put up our own money first, and then we invite others to kind of join in this round on the same terms as we do to raise more funding as the company needs. For investors, the benefits are very clear. So no management or success fees. There's absolutely no lockup or investment minimum. You have the investing is very secure. You don't have to worry about or research the fund infrastructure that you would typically do if you invest in a VC fund and figure out how they're set up and how they are protected. Here, you're buying shares of a publicly listed company, fully audited, regulatory oversight. Also, full transparency. You get to see not only our pipeline, but also not only where we invest, but also where we plan to invest. And investors have unrestricted access to our portfolio companies. The way we see it, if anybody wants to do anything positive or anything good for any one of our portfolio companies, they're welcome to do that. We're only going to be happy to set up a direct line of communication. And last and not least, you can co-invest with us into any one of our companies. So aside from buying our shares, any investor in BTV can also co-invest with us directly into any one of our companies. So lots of transparency, lots of openness, and with very few restrictions. And so we feel we have truly a full alignment of interest, where other VC funds, simply cannot offer that. Here we are. We make money together, and if we make a bad call, we also lose money as well as anybody else. It hasn't happened yet, but we feel that having a full alignment of interest and full transparency and no lockups is definitely an excellent value proposition for investors. So next slide. So, okay, we talked about that. The only thing I will add is we will also aim to pay a stable dividend as our full if you will, I mean, right now we're building a portfolio. We have 7 companies in the portfolio. We aim to have about 20. So, and that's where this new money coming from the SPO will go. It's going to go towards making new investments in portfolio companies that we've already pre-negotiated. So we're talking with about 15 companies, and we hope to close these investments once the SPO closes. So 6 months, 9 months down the road will be a very different company. It's not going to be a BTB with 10 million euro valuation. It will be obviously much more in our view, because we're not going to have 7 companies in the portfolio. We'll have 15 to 20, and there will be a time in about 2 years where we will actually generate enough revenues from our companies that we'll be able to pay a dividend, about 15% per year. So next slide. So what we've done is we have people ask us why, where are you compared to others? So we've done. There are not that many companies, by the way, who are doing what we're doing that are listed on stock exchange. So we have we found several. So they're doing similar things in different markets. 2 of them on London Stock Exchange, and 2 of them are in Australia. So by any measure, BTV is trading at a massive discount to its peer group, which means that eventually there's going to be convergence to the peer group, so the stock price is going to go up. So that's what it means, in layman's terms. So next slide. So let's talk about some of the companies that we're targeting. I'm not going to go into each one of them. It's going to take too long, and we're very passionate about the companies we work with. Next slide. So these are this is the pipeline of companies we hope to invest in once the SPO is completed. So next slide. And these are the ones that we presently have in our pipeline. So Asya is a relationship health app, but what we're doing is we're taking that as an engine and creating exactly a different product for businesses. So it's going to allow anyone who is in, let's say, private banking or asset management, or anyone who's dealing with clients that require a high degree of client engagement to have a better communication tool. So it analyzes your conversations and it gives you advice on how to communicate better. SysOp, I've just mentioned, it's basically it's a smart device for motorcycles to protect and monitor your vehicle at all times. So it's not just anti-theft, it's anything your motorcycle does. And it gives you like a full, like almost like a fitness tracker. It's like a fitness tracker for your bike. Then Stay is a company. It's a service platform for flexible living. It's like basically for digital nomads. You pay one fixed fee, and you can live in any one of dozens of cities for a fixed price at a very nice apartment that's built to your specification. Oricon is a SaaS solution for construction and maintenance. Basically, their value proposition is very simple. Use us, and you're going to save at least 10 to 20% of your construction costs, and you pay basically as you save. So it actually it's not going to cost anything to actually start, but as you save money, you will just a share of that will go to Oricon. So a very good value proposition. Anyone doing construction. So Corebook is an interactive tool to build and manage brands. This is something I knew, for example, very little about, but actually it's a massive, massive market for marketing firms, for anyone dealing with design and brand management, and they're developing extremely, extremely fast. Gedeon is a company that makes these devices and solutions. It's basically all-in-one tracking solution to track high-end, temperature-sensitive products, like, I don't know, caviar, or it could be pharmaceutical items, or it could be certain food items, or whatever it is. Their device actually tracks the temperature, humidity, and light within the packaging, and it uses blockchain to record that. So there's absolutely no dispute when the package gets opened. So an exceptional solution, and already has a lot of traction. Pretty much any delivery company that specializes in this type of delivery of products needs to use it to differentiate itself from others. So it becomes almost a necessary marketing tool. Zoo is a very interesting firm. Basically, it's a Uber Eats or Deliveroo replacement, except that it doesn't charge the provider anything. So you don't have to pay the 30% that you normally pay for Volt or Deliveroo or Uber Eats. You handle your own deliveries, and it's a way to empower a small business owner. And obviously, it can be used anywhere in the world. So it's scaling very fast. And then we have two what we call like innovation projects where we bought the IP from the Imperial College in London. It's one is iWrist. It's a haptic device for vision impaired people, and the other one is a mechanical macro keyboard that can be used. It's a specialized tool for programmers or designers or gamers. So, not going to go much deeper than that. Otherwise, we're passionate about our companies. I could spend, another hour speaking about them. So we'll move on to the next slide. So we have a great management team. They're spread out, all over the world, but obviously our headquarters are here in Riga, in Latvia. So next slide. We have a lot of strategic partners, pretty much all over the world, but of course with a heavy concentration in the Baltics. Next slide. So how do you invest? Two things. To participate in the SPO, just click on the share subscription form, and minimum is 10,000 euros. Closing date is 26th of February. So, but before that date, you not only have to fill out the form, you actually have to transfer the funds to the account that's specified. And once that's done and all the funds are collected, then proportionally, depending, we already know that you'll be oversubscribed, but because we have already more demand than supply, we will distribute the shares, and these will be our new shareholders for the SPO. They will, but you can also just go directly to this ISIN code, go directly to the Nasdaq page, and just buy shares directly through your broker. There's a list of brokers who are eligible to trade. You can buy through Interactive Broker, which is anywhere in the world. So like any other stock. So very easy to buy. No restrictions. A lot of information available on our website and on Nasdaq webpage for BTV. I think that's it. So thank you very much for your attention. And I don't know if Marta has gathered some questions while I was speaking, but if she has, then she will read them to me and I can answer them.
Yes, thank you, Gene, for the very interesting presentation. Now I will proceed with a few questions we have received. But before, a reminder to those who haven't yet submitted their questions that you can still do it in the questions section in the settings panel zone. So we have received the first question. Which do you think currently is the most promising startup BTV is collaborating with?
I'm sorry, which, I didn't hear the question. Can you repeat this, please?
Yes. Which do you think currently is the most promising company Baltic Technology Ventures is collaborating with? I think the question is about your partners.
Yeah, we get asked this a lot. I don't like to say it. It's almost like asking a parent, which one of your children do you love the most? Like, so we love them all equally. There's definitely some technologies which we feel that really have massive application and potential. Some are regional, some become, they will, I know in my view, they're all going to be successful. That's why we are working with them in the first place. But some, I think, will be regionally successful, and probably in a few years they're going to get bought by like a larger player. Well, a couple of them I think have a potential of really going very, very big, going global, like companies like Asia or Zoo. They're scalable. totally. I mean, they could go from, from where they are to, to being a kind of a global standard. It's there's no limit where it can go. Like, or Corebook, for example. I mean, everyone who's ever used like Corebook, they're raving about it. They say like, it's just incredible. Like, why this hasn't been created before. So, I mean, something like that, products like this, they could become the next whatever universally accepted application all over the world.
Thank you. The next question was partially answered already during the presentation, but could you please elaborate more on requirements for taking part in the SPO? How can one take part in the SPO?
It just have to fill out the subscription form, submit the necessary documents, and transfer the money. That's it. The links are to subscription. They're on the web page, the Nasdaq web page. If you just go to our like Nasdaq page, there is like news, about the SPO. You just click on that, and it's very easy. Just follow the instructions on the page. You have to fill out the form and transfer the money, and then you get the shares once the SPO closes at the end of February.
Thank you. The next question, you explained you will be engaging with companies with revenue and low single-digit multiples, then exiting at low double-digit multiples. So are you expecting 6 to 10 times return and a default rate of 30%?
No, I'm expecting 5 to 10x return, and we don't expect defaults.
Okay, thank you. This was the last question we have received, and let's maybe wait a little more if some more questions come. But thank you very much for the presentation. Also, thank you all attendees who participated in asking questions and joined. The webinar recording will be available in Nasdaq Baltic YouTube channel and also in company's announcements. So thank you, Gene, and until next time.
Yep. Take care. Thanks. Bye-bye.